And we're talking about a black swan out there that could topple the equity market rally. Marianne Bartels of Merrill Lynch Wealth Management, tell us about this black swan.
Well, I don't know if I'll classify it as a black swan, but certainly if you're looking for a potential risk to the rally, we're looking at crude oil because now it's above $100. And from a technical perspective, we've had some breakouts that may make some investors a little nervous here.
Yeah, very much so. I tell you what, let's bring in the camera, Matt. Show everyone the chart just so we're all on the same page. And you can see the high back in 2011, 114. Today we got as high as 104. We backed off somewhat. When you look at that blue line, what does that tell you, Marianne?
Well, the high was 2011. We're now above 100. And when we go to our next chart, you're going to see that there's a technical breakout that might lead you back up near 114. And I think that might be somewhat of a worry price. First, you'd have to get above 110, which was the high of last year.
Right.
But if we start breaking up near 114, there could be some concern that there's a tax to the consumer and consumer spending starts slowing, and what does that do to the economy? Now, the bullish part will be, as you see a slower economy, we're not going to get tapering, right, because it's all data dependent. So then we're going to go back to...
Except that we've had very strong jobs gains now for 2 months in a row, 195,000 jobs created in the U.S., 2 months in a row. So that argues for tapering, doesn't it?
Exactly. So right now, well, we're not really forecasting tapering until a little bit more to the end of the year, but I think the market is around September. But what our economists keep stressing, and I think this is very important for viewers to understand, is tapering is not tightening.
Right.
It's still a theoretical interest rate cut. So in theory, it's, and these are not exact numbers, it's like from cutting 50 basis points to 25 basis points. So there's still easing that's occurring, but less of an easing. So there is still support from the Fed, but I think we have to reprice because now we're seeing interest rates go higher. So with interest rates higher, and if crude oil prices keep going higher, I think you're going to start hearing some people get concerned that future data may ease, and that's why we raise it as a risk factor.
And has the team at Merrill Lynch actually put together some sort of number where you can say if crude rises another X amount of dollars, it does the following to GDP? Is there a direct link to that?
There generally is a direct link, but not recently. Normally it's about, you have to get to 3% of GDP. It's like a really big, and it's global, right? This becomes a big global, and we're nowhere near that level. But now that it's been somewhat of a technical breakout, I think it's worth watching to see how high it might go.